10 tips to become a powerful Forex trader. Education and knowledge. Invest time in learning about the Forex market, trading strategies, technical and fundamental analysis, risk management, and market indicators. Gain a solid understanding of how the Forex market operates and the factors that influence currency prices. Develop a trading plan. Create a well-defined trading plan that outlines your trading goals, risk tolerance, preferred trading style, and strategies. Stick to your plan and avoid impulsive decisions based on emotions. Start with a demo account. Before risking real money, practice trading with a demo account. It allows you to familiarize yourself with the trading platform, test different strategies, and gain experience without financial risk. Risk management. Implement effective risk management techniques, such as setting stop-loss orders, limiting the amount of capital you risk per trade, and avoiding over-leveraging. Protecting your capital is crucial for long-term success. Technical and fundamental analysis. Utilize technical analysis tools, such as charts, indicators, and patterns, to identify potential trading opportunities. Additionally, stay updated with economic news, geopolitical events, and macroeconomic indicators for fundamental analysis. Discipline and patience. Cultivate discipline and patience in your trading approach. Avoid chasing quick profits and be willing to wait for the right setups. Stick to your trading plan and avoid emotional decision-making. Money management. Manage your trading capital wisely. Avoid putting all your eggs in one basket by diversifying your trades and not risking too much of your capital on a single trade. Maintain a healthy risk-to-reward ratio. Continual learning. Stay updated with market trends, news, and changes in market conditions. Attend webinars, seminars, and workshops to expand your knowledge and learn from experienced traders. Continual learning is key to adapt to evolving market dynamics. Keep a trading journal. Maintain a trading journal to record your trades, including entry and exit points, reasons for the trade, and notes on the outcome. Reviewing your journal can help you identify patterns, strengths, and areas for improvement. Emotional control. Develop emotional control and avoid making impulsive decisions driven by fear or greed. Emotions can cloud judgment and lead to poor trading choices. Stick to your trading plan and remain disciplined. Remember that Forex trading involves risk, and there are no guarantees of profits. It takes time, practice, and experience to become a successful Forex trader. Be prepared for ups and downs, and focus on continuous improvement and learning from both successes and failures. Please follow for next video.